right, everyone. Good afternoon. My name is Jerry D'Ambrosio. I am the manager of educational content with VectorVest. I want to welcome everybody here. Great to see a lot of familiar names of you folks that come to our weekly coaching. I just want to do a quick sound check just to make sure everybody can hear me okay. If you guys don't mind, those of you using GoToMeeting, just type in that chat box, that question box, that you can hear me. Anything that would let me know that you guys can hear me okay. There we go. I got a Y. I got a yes from Hector. Hey, Mark. Johnny says good, fantastic. So we are ready to go. Again, guys, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Just so you know a little bit about me, I've been with VectorVest now almost 15 years. And my specialty is the short-term swing trading technical analysis, I guess faction, you might call it, of the education department. We've, over the years, kind of really evolved as a department because we understand that there are different needs out there. Not everybody is a trader. Not everybody really is an investor. Some people are just short-term traders and they don't really focus on fundamental valuation. Some like trading options. So we have different factions of the education department, and I am a part of a larger, highly skilled and experienced team of educators. And again, my job is to make you better traders. Again, that's one of my main roles with VectorVest. I'm a trader myself. I really pay very close attention to chart patterns and technical analysis and candlestick reversal patterns, things like that. So my promise to you is this. By learning what I'll show you today, you'll see how you can use technical indicators to help anticipate what is likely to happen in the future. And you notice that I'm not using the word predict. That's not what I'm here to do. That's not what technical analysis is all about. We're not here to predict. We use these technical indicators to give us an idea of what is likely to happen in the future. Not everything's 100%, but these indicators are really, really good in helping us kind of get a jump on breakouts, get a jump on trend reversals. It just depends on the indicator that you're using and really that's your market, the market that you're in. One of the main things I want you to understand is speed is the key. The speed at which you find your trades and react. And again, I've been with VectorVest now for a very long time, almost 15 years, and I've worked with a lot of traders over the years, and they let me know some of the problems that they have when it comes to finding trades and using technical analysis in general for trading. I'll get to that in a moment, but what I want to tell you guys is if you stick with me to the end, I'm going to share with you a copy of today's slides. Just somebody remind me at the end, somebody say, hey Jerry, don't forget the slides. We're going to be together about an hour. So right around 2:45 Eastern time, about 45 minutes from now, somebody put in the chat box, hey Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. Now the people that I've worked with, the traders that I've worked with over the years, they say they feel like the market's a crapshoot, especially with, it's been a great run off of the March bottom for sure, right? But you get these points in time where the market's up or down, it's sideways, not really trending, and they do feel like it's a crapshoot. We're not gambling here. The whole idea of trading in the stock market, it's not about gambling. It's about making informed, rational decisions based on the information in front of you, right? Look, you can gamble and throw a few bucks at a penny stock and hope it pumps, right? But that's not what we're looking to do here. We're looking to buy solid companies, and pinpointing entries and exits as opposed to investing where you just buy and hold for the long term. Again, you look at things like fundamental valuation, earnings, and sales growth, and long-term risk factors, things like that. They also feel like they don't know everything when it comes to trading, so they just avoid it. They say that there are just too many indicators with all these funky names. So they just say, you know, I'm going to stick to what I'm good at. I'm going to stick to the fundamental analysis aspect of investing, and just not deal with trading and technical indicators or anything like that. Plus, when they do it, they do spend a lot of time looking at charts. And don't get me wrong, I love looking at charts. I'm a big chart reader. I like to get to the chart a little bit faster than having to go through, um, hundreds of charts. And I'll show you a way to do that. Imagine going through hundreds of charts every single day just to find a handful of candidates. You're going to really be frustrated, and you're going to give up. What we want to do is we want to put probability on our side. You don't want it to be a crapshoot anymore. You want to stack the deck in your favor. You want to know what you're doing, right? And you're not going to know everything about every indicator in the book, because there are hundreds of different chart patterns and technical analysis indicators out there. But you'll know exactly what you need to know to be successful. Plus, you want to find trades quickly instead of looking at hundreds of charts every single day. So the thing I discovered is that there are 3 areas that traders need to focus on to be successful. The first is when. If you are a VectorVest subscriber currently, you know that we look at the market first. We don't look at the individual stock first. We look at the market. What is the market doing? That's going to determine what we do. It's going to determine whether we're bullish, we're bearish, or neutral. Okay, meaning, we're sitting out. We're not buying any stocks right now. Maybe the market is a little too volatile for your liking, so you just want to sit out. But the first part about it is recognizing what the market's doing. Once you do that, then the second part is, what are the indicators that are ideally suited for the market environment that I'm in? And then finally, how am I going to find my trades? Okay, how am I going to find my trades? And we'll talk about the different ways to do that. So let's talk about the first thing that you need to understand is when to use the indicators. Now, there are three main types of market situations that we're going to talk about. The market can do one of 3 things. It can trend, like we're in now, right? A really nice uptrending market, not a ton of volatility, your occasional down day or two. We really haven't seen much of that over the last couple of weeks, but we're in a nice steady uptrend. Okay, so this is a really comfortable environment for most everybody, whether you're an investor or a trader. Everybody likes a market that has very little volatility and that climbs steadily over time. Then we'll talk about another type of market it's called a trader's market, or a market that no longer trends. So it's moving sideways, it's channeling, maybe bouncing up and down, back and forth between support and resistance. Okay, not everybody welcomes this type of market, right? I know investors don't like a sideways market. Even if you're a good stock picker, the average stock is moving sideways along with the overall market. Traders love it. Traders will take advantage of those retracements and those rallies off of support and those rips off of resistance. Buy and sell, short and cover based on those movements. And then finally, the market can hit extremely oversold situations. All right, similar to what we saw in March of this year. Excuse me, similar to what we saw in December of 2018. All right, so it's really important first, folks, to recognize what the market is doing. Okay, so here's what a trending market looks like. Now, this is 2017. Don't worry about the time frame. It's the behavior of the market that's important. Now, what we're looking at here is what's called the VectorVest composite. This is an arithmetic average index of all. We track about 8,000 stocks. So we think it's a better representation of the broad market than just 30 stocks that the Dow tracks or 500 stocks that the NASDAQ tracks. We combine all the exchanges, all the major indices into one 8,000 stock index, and we use this, what we call it's called the VectorVest composite. It's the foundation of our overall market analysis. So this is a nice uptrending market, isn't it, right? You got higher highs, you got higher lows, not a ton of volatility. You're going to get your pullbacks, but the pullbacks are short-lived, and the rallies are generally longer. Excuse me. Okay, and what our jobs are as traders is we want to be bullish only, meaning in an uptrending market, I'm not going to look to short stocks. Okay, I'm going to look to buy stocks. I'm going to look to buy stocks after each subsequent high or low, and I'll become defensive at each new high and eventual pullback. Now, it's defensive, it's not bearish. Uh, Defensive meaning I'm going to tighten up my stop criteria. I'm going to take profits, okay, and then look to add to current positions or buy new stocks after each high or low. I'm not going to short the pullbacks in an uptrending market. Now, look, occasionally you might get a kind of an extended pullback there, but that's not common, right? And we talked about stacking the deck in our favor and putting probability on our side, and this is the way to do it. You may say, well, that pullback there, I could have made some money. So on the next pullback, I'm going to short the market. But you're likely to get burned, right? You're likely to get burnt because those pullbacks are rather short. Look, you're in an uptrending market, right? So if you're in an uptrending market, it's just logical to understand that rallies are longer and pullbacks are shorter lived. That's why you're in an uptrending market. Now, the reverse goes for if you're in a downtrending market. The rallies are shorter, also known as dead cat bounces, right? Dead cat bounces, fake out rallies in an overall downtrend. And so in a downtrend, I'm going to look to be bearish only and not bullish. There's a circumstance or a situation where I am going to look to buy stocks in a downtrending market. I'll get to that in a second. So that was 2017. Now we're into 2018. Just kind of fast forwarding into the first 7 or 8 months of 2018, and the market is no longer trending. How do I know that? Well, the market's not hitting higher highs anymore, but it's not hitting lower lows either, right? So essentially what it's doing is it's just bouncing up and down between support and resistance. If you're an investor, a kind of a buy and hold investor, and you're buying and holding through this time period, it's rather frustrating, right? Because you'll make money and then you'll give it back. You'll make a little bit, you'll give it back. You'll make some, you'll give it back. You're just spinning your wheels essentially with the average stock. But traders will buy off a support, they'll short or sell off a resistance. So they don't mind this type of market. Okay, a trader is in it for the short term. So any short term rally, any short-term rip, they'll look to take advantage of it. And then finally, the market can hit extremely oversold situations. So now this is the end of 2018, and the market's in a downtrend, isn't it? Right? The market's in a downtrend. We're hitting lower highs. We're hitting lower lows as well. But at the end of December of 2018, two of our market timing indicators, these are proprietary VectorVest indicators. The MTI stands for market timing indicator, and the BSR stands for the buy to sell ratio. When those indicators gets to below those levels there, the MTI below 0.6, the buy to sell ratio below 0.2, we feel that the market is extremely oversold. Okay, we feel that way because we've done a lot of research looking at these indicators and when they got to those levels. More times than not, and I mean the majority of situations and instances when those indicators got to below those levels, the market almost imminently rallied. Okay, now I say almost imminently. What I mean by that is, and what I want you to take away from that is, you don't just buy, you don't load up the truck when those indicators get to below those levels, because the market can continue to go down. Okay. What we do is we wait for that rally. We wait for that really explosive rally. That happened the day after Christmas in December of 2018. You got a nice bullish reversal candlestick formation called a one white soldier. You got follow through the next day. So that's our re-entry back into the market. So earlier I said I'm not going to buy stocks in a downtrending market. However, this is the exception here, is when those indicators get to below those levels. Okay, So, by the way, this session is being recorded, guys. So you can go back. You'll get this recording a little later this evening. You can go back and review that because it is important to understand what the market's doing. That's the first thing you have to understand. Are we trending? Are we channeling? Or is the market hitting an extremely oversold level? And that's because next, once you understand what the market's doing, you have to then select the ideal indicator, the ideal technical indicator to use in that type of market environment. So this is what we're going to do. When we're in a trending market, we are going to use the MACD. MACD stands for moving average, convergence, divergence. It's got the words moving average in it, right? And if you know anything about moving averages, you know that they are trending indicators. They identify meaningful changes in trend. Well, it just makes sense to us, hey, if the market's trending, let's use a trending stock selection indicator, okay? Oops. If the market's not trending anymore, right? So we looked at what the market, we saw what the market looked like when it's not trending. It's not hitting higher highs, it's not hitting higher lows, it's bouncing up and down between support and resistance. And that's what we're gonna do. We're gonna look for stocks that are, for example, when the market's retracing from support, maybe it's done so for the second time or the third time, right? You got to really establish significant support level on the market, and it's just retraced from it for the second or third time. We're going to look for stocks that are also retracing from their own support levels. Okay, if the market's retracing from resistance, and you're a trader, right? And that's why you're here today. A lot of you are traders. You want to short stocks. You look for the retracement off of resistance from the market, and then you look for stocks to short that are also retracing from their own support levels. And then finally, one of my favorite indicators is stochastics. Stochastics identifies overbought or oversold price situations. So when the market is extremely oversold, we are going to focus on and use stochastics as an indicator to help us find stocks that are also extremely oversold. So here's what the MACD looks like on a chart. I've got Netflix up at the top. I added MACD to the bottom of the chart. Don't worry about the time frame again. It's the application of the indicator that's important. Really simple application. And I'm not going to get into the calculation of the MACD or the formula of the MACD. If you want to know that, you can Google it. I'm just going to get into the application of it. How do we use the indicator? And a really simple application is to look for times when these yellow bars, okay, that's the histogram of the MACD, when the yellow bars go from below zero to above zero. That is your buy signal. When the histogram goes from above zero to below zero, that's your sell signal. Okay? Below zero to above zero, that's your buy signal. Above zero to below zero, that's your sell signal. And as I go through here from left to right, what I want you to recognize is the fact that Netflix is a trending stock. It's trending higher. Higher highs, higher lows. Here we're just coming off of another higher low. So we got a bullish MACD signal. We buy. We sell at the bearish MACD signal. You got a quick change in direction there. Gives us an opportunity to get back in. You buy on a bullish MACD signal. You sell on a bearish MACD signal. Okay, not every trade's going to be a winner. You winded up with a small little loss here, but look what happened. The stock moved sideways, did drift lower. The MACD histogram stayed below zero the entire time until you got a bullish crossover that gave you a re-entry. Okay, just again moving from left to right, and look, you're a few weeks or so, about a few weeks or so off of this higher swing low, right? So, you know, the MACD it doesn't pinpoint turning points. Right? It doesn't identify pivots or results in entries off of pivots. It's a lagging indicator. I'll be honest with you, right? Because it uses moving averages. Moving averages are lagging, so it requires a meaningful change in direction before we get into the trade. Okay, and again, there's your bearish MACD crossover. You sit out. We're not going to short the stock because we are in an uptrend. Okay, but we got a bullish MACD crossover here, a small little loss potentially, but you're always able to get right back in and just catch the next wave. Now here you're looking at August of 2018, you know, we're not in a trending environment anymore, right? Well, first off, we're not in an uptrending environment anymore. How do I know that? You see this rally here? There was your uptrend, and there was your failure, right? The failure to resume that uptrend was here after the price broke down and failed to make a new high. Now we're seeing lower highs and lower lows. So what I'm not going to do is I am not going to take a long position on a bullish MACD crossover in a downtrending environment. We said that earlier when I talked about the overall market and how I'm not going to be buying the rallies in a downtrending market. Why? Because they are short-lived, right? They are short-lived. Look, you'll eventually catch the bottom. You know, you'll eventually catch the bottom, but that's not what we're trying to do. And in fact, December of 2018 was when the MTI and the buy to sell ratio got to below those respective levels. So it would have given us an opportunity to enter back into the market. But you know, using an indicator like stochastics would have helped us, and probably maybe would have gotten us in even a few days earlier than that bullish MACD signal that you see there. Okay, so that's the MACD. Very simple application. You know, if you're in an uptrending market, you want to favor uptrending stocks, solid companies. Bullish MACD crossovers are a buy signal, bearish MACD crossovers are a sell signal, and you want to only focus on going long, being bullish in that environment. Now, another very popular trading technique is to use support and resistance levels. One of the great things about the VectorVest tool is it has a way to automatically draw the support and resistance lines for you. Let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Basically, a support level is a point where stock prices have stopped going down and they begin to go back up. And that typically happens on multiple occasions. It's where demand for that stock is deemed strong enough to push the price higher, to support it from falling any further. Resistance is a point where stock prices have stopped going up and they begin to come back down. Again, that typically happens multiple times. It's where supply is deemed strong enough to push the price lower, to resist it from rising any further. And it's the ultimate crowd mentality indicator. So I want you guys to think of it in terms of this. You buy a stock, right? You buy a stock somewhere here, you watch it go up. You don't sell it. Why don't you sell it? Because you think it's going to continue to go up, right? You don't buy a stock because you think it's going to go down. You buy it because you think it's going to go up. And then what happens? Comes crashing down. And what do you say to yourself? Well, if you know, that's a violent drop there, right? So I'm not sure if either you panic sold or you held through it. If you held through it, what are you saying to yourself? You're saying, well, all right, worst is over, hopefully. If it ever gets back up there again, I'll sell it. And what happens? It eventually gets back up there again. And you and everybody else that bought it somewhere back here the first time that didn't sell it on this crash, you sell it and it puts tremendous pressure on the stock's price. So how do we use support and resistance in our trading? There's 4 different situations that you'll encounter. 2 are bullish, 2 are bearish. The 2 bullish situations, or the situations that where you would buy, number 1, price retracing from support, retracing from support, retracing from support. That's bullish. Okay, that's a buying opportunity. The second buying opportunity is if you see price breaking out through resistance, particularly on high volume. Okay? Just think about it. We said that there was that built-in selling pressure, right, around those resistance zones based on the crowd mentality. If price is able to overcome that selling pressure and bust through that resistance level, again, on higher volume, that's very bullish. That's an indication to buy as well. All right. The 2 bearish situations are, 1, if you see price retracing from resistance, that's bearish. If you're long a trade, you should consider selling it or taking other defensive actions when you see price retracing from resistance. The other bearish, excuse me, the other bearish situation is it, and we don't see that on the chart, but if you see price breaking down through support, that's the floor. Remember, if the floor is broken, you potentially have a long way to fall from there. Okay. And then finally, it's my favorite indicator. I love stochastics. I really like stochastics, applying stochastics with bearish and bullish candlestick reversal patterns. For example, if I see a stochastics oscillator below 20, I'm going to look for a reversal signal, right? Because stochastics, it oscillates from below 0 to 100. Below 20 is considered oversold. So if the indicator is telling me that price is in an oversold situation, right, I am going to pay very close attention to bullish reversal patterns like haramis or white soldiers or piercing patterns or engulfings or hammers, things like that. Price action that potentially could result in a change in direction. And that's more likely to happen when you have a really oversold price situation, right? So when the indicator is below 20, that's going to give us a nice opportunity to buy. Now, we don't just get in, we don't buy just because stochastics goes below 20. That is what's called a setup. That's getting us ready to enter the trade. The entry is when the stochastics oscillator goes from below 20 to above 20. And as you can see, now, and by the way, this is an uptrending stock, isn't it? We're looking at Abbott Labs 2017. Don't worry about the time frame, but we're looking at an uptrending stock. And you may think, well, that pullback wasn't oversold. This pullback, how can that be oversold, right? Well, if you're looking at price, it's hard to understand that or determine if that is a strong enough pullback to result in an oversold situation. But that's what the indicators are for, right? The indicators help us make better sense of price. So yeah, even though that pullback was rather short-lived, it resulted in an indicator in the stochastics oscillator going below 20. Couple of days off of the bottom, good opportunity to buy. So here's that situation where, again, I really look for. Here you have a sharp pullback, right? Yeah, you're in an uptrend, but you got a really significant pullback causing the stochastics oscillator to go below 20. That red candle followed by that unfilled green candle there, that's called a bullish harami pattern. That's a reversal pattern. We got followed through the next day. You winded up getting the stochastics crossing over from below 20 to above 20 the following day. There's your reversal signal. Okay, I love trading these. I love trading these candlestick reversal patterns. So really good opportunity there for some quick short-term gains. What I'm really going to pay close attention to is the most recent swing high, because again, I'm big on candlestick analysis, and boy, when I see long upper wicks like that at the end of an uptrend, that is an area of concern moving forward, because that is the area where sellers really took over. They really took control. Now I know those two green candles there with the long upper wicks, they're green, but you can see the long upper wicks, which means that the closes of the day were well off of the highs. That's not bullish, guys, right? Especially in an uptrend. That indicates a weakening uptrend. So if I get into a trade off of a pivot that's lower than that area is where I'm going to look to take profits. And as you can see, price reached that level, didn't break through it like I hoped it would, and then retraced from it. Good opportunity to take your gains off the table. Now price falls, stochastics goes back below 20, and that candle there where my date line is, there's a long lower wick down there, okay, which is essentially at the same level that price stopped back here. So what is that called? That's now called support. Okay, that's now called support. Stochastics goes below 20, stock retraces from support. That following day, that's a retracement. I know it's a doji, but that's an entry candle there. That's a retracement, clear retracement off of that support level. And I know what happens the following day, right? So you're in the trade one day and then you get a crash. You got a big red candle And maybe some of you in that situation where you enter a trade one day and the very next day the stock crashes and you sell, right? I don't want to ask if anybody's been there before, but I'm sure you have. It's called panic selling, right? You're in the trade one day, the stock crashes the next, you say, all right, I'm out of here, I was wrong. But what I want you guys to focus on here is that support level that we just bought off of. It's a little premature just to sell on one big down day when you have a floor there that will protect you against future losses. And the stock stopped again at that level and then retraced from it. And you may think you're in the clear here, right? But then what happens? The stock comes back down and retests that support level. By the way, uptrend is over, isn't it? Right? The uptrend is over. I talked about the long upper wicks at the end of uptrends. What I really like to see is these long lower wicks at the end of down moves, either when stochastics is below 20, which it's not here, or at a support level. Okay, so you got a nice support level here, bullish hammer, follow through the next day. Now this pullback didn't result in you exiting the trade because, again, of that support level that's protecting you against future losses. Okay, nice retracement off of support. You got that resistance level that you cannot ignore, right? It's the same, almost to the dollar here, zone that price stopped rising twice before. And lo and behold, what happens? Price reaches that level again and retraces from it. Okay, we're always going to get another opportunity. We'll always get another opportunity to enter back in. There's stochastics crossing from below 20 to above 20. Now, if you take that trade, you still have resistance here that you got to pay attention to. And you see that big red candle? That's my exit. And look, I know what happened afterwards. So I'm going to be straight up with you and tell you that I would have exited on that candle, closer to the close when I saw, a clear retracement off of that resistance level. And I would take my gain off the table and move on. Immediately what happens afterwards is price rallies and then breaks out through that resistance level. Okay, that we said that was bullish. Now here's your re-entry. Your re-entry is the retest of support. When price rises and breaks out through resistance, that resistance level becomes support. So when you see price retesting that support level and retracing from it, there's your re-entry. All right, you got a little rally and then you got another retest. Actually got a retest here and then another little mini rally and then another retest. Okay, so you held in there, you understand that that resistance level is now support, protects you from future losses, and you're on your way. Okay, so now we're back into an uptrend, right? We're in an uptrend. Price pulls back, stochastics goes from below 20 to above 20. We buy, and then and then price falls. And look, and it's not panic selling to sell here, right? Because price broke through that most recent swing low that you entered off of. Okay, so you're making rational decisions based on price action and and reading the chart. You're always going to get back in. In this case, if we would have sold in this area, maybe we bought back in at a little bit of a lower price. Now we're back into that sideways action, right? Stock is moving sideways. We're not trending anymore, right? We're bouncing back and forth here. So you got 2 touches, 3 touches in this support zone. Stochastics crosses from below 20 to above 20. You buy, you're in the trade a couple days, and then it crashes again. But hopefully now you all are better equipped at managing these types of trades, because boy, that would scare me, right? If I was new to trading or didn't understand fully support and resistance, there's no question I would have sold, right? I get in, I'm in the trade 2 days, I'm happy, and then the stock crashes and I'm underwater, and most likely you would sell, but you got this support level that's going to protect you. And then it retraces from it, and then there you go. All right. So now finally, the third part to this triangle here is how are we going to find our trades? We understand what the market's doing, right? It can trend higher, it can trend lower, it can channel, or it can hit an extremely oversold situation. Depending on what it does or what it's doing, we now have an indicator to use in each type of market. How are we going to find our trades? Well, the first method is what we call the 1-by-1 method. This is where you would look at charts. You would maybe go into the S&P 500 watch list within VectorVest and just pull up all the charts. And if you were in a trending market, you would look for MACD to just cross bullish today, right? Not a week ago, not 4 days ago, today or yesterday. Over the last 2 days, did the MACD, first cross from below zero to above zero? You would have to go through all the charts initially to do that. That's not my preferred method, although I do like looking at charts. My preferred method is to use a scan, which filters through the S&P 500 if we wanted to find all stocks in the S&P 500 that today or yesterday have had a bullish MACD crossover. And then the other way, which I love as well, is using automatic alerts within the VectorVest program. We'll talk about that. So the one-by-one method, simple. You recognize what the market's doing. You have an indicator in mind that you want to use, and you go through the charts. Go through 500 charts. Go through, a couple of hundred charts to determine how many handful of candidates you have. My preferred method is to use a search, and within the VectorVest real-time program, we have a tool called ProTrader. ProTrader is a technical analysis scanning tool. It adds scans like moving average crossovers. It adds scans like the MACD, both bullish and bearish. It adds stochastics, support and resistance, all 4 support and resistance situations that we talked about. So breaking support, breaking resistance, retracing from support, retracing from resistance. Okay? And then the final method of finding stocks is to use automatic alerts. Within the VectorVest real-time program, we have a tool called the Watchdog. The Watchdog is a real-time alerting system, and you only have to set it up once. With the scan, you have to click a few buttons every day, like just to filter through the database. With the Watchdog, you set it up once, and I have this Watchdog set up all the time. Since we are in a trending market right now, as you'll see, I have a MACD bullish on the S&P 500. So I'm going to look at stocks that have a MACD crossover here. Okay, my last one was today at 1024. JBHT, CMS, right out of the gate, 934, had a bullish MACD crossover today. So I get alerted of these stocks. I don't have to sit there and click a few buttons and run scans every day. With the Watchdog, which again is included in the real-time program, it does it for me. I set this up probably years ago, and I have it constantly running. And when I'm in that type of market, when I'm in a trending market, and then I go look for stocks to buy. All right, you guys showed up today. I'm gonna take a few guesses as to why you guys are here today. I hope you're not missing out on the current market, right? We're in a really solid, nice uptrending market. I hope you're not missing out on the current market, but maybe you are. Maybe you're a little gun shy. Market is a little toppy, by the way. So, but it just keeps rising, and we've been telling our subscribers now for weeks that the market's continuing to go up. You want to play it to the upside, but you just want to be a little bit careful because it is a little bit toppy. Maybe your current trading plan isn't performing like you want it to, or you showed up today because you want a better, faster way to find trades. So what did we learn today? Today we learned to match the market to your indicator. I'm going to kind of flip that around. I'm going to say you learned to match the indicator to the market, because you got to look at the market first, right? You learned how to effectively use popular technical indicators, and then how to quickly and easily find trading opportunities. Berger said, Watchdog is the best game in VectorVest. Yes, it is. It's a great tool. The big lesson, technical analysis can help anticipate future direction, and you can find some great trading opportunities, especially if you use the power of speed. And that was the one thing I wanted you guys to take away from today is, look, you can do it the one-by-one method, but there are a lot more faster ways. So you might be asking, how can I get started using technical analysis now? And by the way, I don't know the exact number, and I don't know if you folks are a part of that number, but in 2020, I think the number of new accounts, new trading accounts, more than doubled from the year prior. This pandemic has um, if any good comes out of it, it is people taking more of a proactive approach to making money, right? To supporting their families. And trading in the stock market can do that. Now, it's not a guarantee. There is a lot of risk that's involved here, but it really feels like people are again being a little bit more proactive and finding different ways to make money. So the number of new accounts doubled in 2020. So, maybe you're one of them and you want to start using this type of approach now. You have a choice. You can do it the slow way, and the slow way is the one by one way, the one by one method. You look at charts. I don't know how long it would take you to find a handful of candidates on a given day, but you know, there are some faster ways. Time is money, right? So if you're not wanting to sit there all day, there are some faster ways. So the VectorVest real time, the one by one method, just simple. You look at the charts, you understand what the market's doing, and then you look at the charts to see which indicator you want to use. Then the other way is to use the search. Within the real-time program, the ProTrader tool has all the technical scans that you need, including the MACD, support and resistance, and stochastics. And then finally, the third way is the automatic alerts. All right, we have that watchdog tool that allows you to set up moving average, MACD, support and resistance, any of the ProTrader folders, any of the ProTrader searches in that folder. Okay, so as a recap, here's what's included in the VectorVest real-time program: fundamental and technical charting, market timing signals for clear entries back into the market, those ProTrader scans, the watchdog, which gives you instant alerts. One of my favorite tools is the Genius. It's an automated portfolio manager with alerts, gives you alerts. Pre-built trading systems, real-time streaming data. Now, we sell this package normally for $137 per month, but we have a special offer for you folks, only you folks here that are on this webinar. If you don't already have the real-time program, we're going to offer it to you for 30 days for $9.95. And what I'm going to do is I'm going to put that address, www.vectorvest.com/capture, whoops, no space, just capture trades, not TARS, capture trades. Okay, you guys should see that in the chat box, and I put it in the chat box so you can just click on it. If you're not already a VectorVest, so let me speak to kind of you guys individually. If you are not a subscriber at all, perfect opportunity here to take a look at everything that I just talked about and a ton more for 30 days for $9.95. Go to that website. I entered it in there, so in the chat box, so you can click on it. $9.95 for 30 days. If you already are a VectorVest subscriber, but you don't have the real-time program, you have either the intraday version or the end-of-day version, you are eligible for this trial. And as a bonus, I'm going to give you guys this stock buying checklist. Okay, this is great for those of you that like to be a little bit more hands-on with your trades. It really helps follow all the rules that we discussed. So I'm going to throw this in there as an extra bonus. And this is a 30-day money-back guaranteed as well. If you don't like it after 30 days, just give us a call. We'll give you your $9.95 back. Now, this trial will automatically convert. I have a couple questions coming in about how much does it cost after the trial. It is $137 per month, all right, after the trial. If you don't like the real-time program, maybe you want to go back to your end-of-day version or the intraday version, just give us a call before the 30 days is up. We'll do that. Otherwise, it will convert into a monthly subscription. Now, there is an annual savings if you decide to save some money and go with the annual subscription. I believe it's $12.95 for the year, which is a few $100s off going month to month for 12 months. Okay, but you have 30 days to think about it. Are there any questions, guys, before I kind of wrap things up today? I hope you guys enjoyed today's presentation. More importantly, I hope you learned something that you didn't know before. Hector's asking, can you search Canadian stocks too? Yes, Hector, you can. If you're a Canadian resident, we have VectorVest 7 Canada real time. So it's a different database. It's a different program, but we have that as well, and you can take out the trial the 30-day trial for $9.95 to our VectorVest Canada program. Absolutely. Steve says, I walked away and missed the info on the slides. Is there a link to download the slides? Nope, there's not a link, but I want to thank you. So what I'm going to do is in the handout section, I'm going to put our slides in there. So you guys should see that in a moment. It's going to say 3 techniques. It's a PDF of the slides. So thank you for reminding me, Steve. And, another question is, are the slides included with the archive presentation link? No, but the slides are currently in the handout section of your GoToMeeting control panel. You guys should see them now. You guys see that three techniques PDF? Okay, it's in your GoToMeeting control panel. You might have to maximize it, click on that orange arrow to open it up, but it is in there. You're welcome, Steve. Absolutely. Again, my name is Jerry D'Ambrosio. My email address is jerryd, Jerry, D as in David, at VectorVest.com. If you have any questions about anything that I taught you guys here today, shoot me an email. If you take out the real-time program, and if you have any questions, shoot me an email. Craig says, if I only have a few $100s a month to invest, should I diversify and invest in multiple stocks or focus on getting more shares of one? Craig, what I would focus on is saving up first. Few $100s a month. I would try to save up, honestly, until you have maybe a few $1,000s to start with. That's kind of the way to do it. I hate to discourage you from kind of starting now. But if you were to do that, if you were just to start with a few $100, your question is, should I diversify and invest in multiple stocks or focus on getting more shares of one? You don't want to buy just one stock, right? Because you're putting all your eggs in one basket with a few $100, not a lot of eggs, right? So a couple of options there. Save up a couple $1,000, maybe 2. Put $500 into 4 stocks. I think that kind of makes sense to start. But you don't want to just buy one stock. You want to buy at least 3 or 4, because if one stock goes against you, it's not going to kill your account, right? You're welcome, Bill. Thank you, man. I appreciate that. All right, Craig. Hopefully, I answered that for you. Ravindra says, if you have a smaller amounts, you can buy an ETF. Yeah, you can buy. You could focus on buying an ETF. Yeah, maybe SPY, right? Apply some of the techniques that I taught you here on the SPY. That's rather expensive too. I mean, it's a couple $100, but you can focus on diversifying through ETFs as opposed to individual stock risk. The replay will be sent out, guys, in an email in a couple of hours. So that's where you'll hear the replay of today's webinar. My email address is jerryd, Jerry, D as in David, at VectorVest.com. Okay, jerryd at VectorVest.com. All right, folks, have a great weekend. It is Friday. Week went by fast. Have a great weekend. If you have any questions, just shoot me an email. Look forward to working with you folks. Have a great day, everybody.